Hello everyone, George DeSantis here with the look at the market for the week ending May 13th, 2016. We'll start off by looking at the monthly chart as we usually do. So this is the monthly chart of the S&P 500. Let's take a look. First of all, we have the Kalman filter crossing above the instantaneous trend line for the first time on this monthly chart since it went below here, below the Kalman filter way back when, in the middle of June of 2015. So how significant is this? Well, time will tell. Other indicators we are seeing here is the parabolic is now below the most recent bar, this month's May's bar, and according to the parabolic stop and reverse indicator, this is telling us that the long-term trend is now reversed to the upside. Well, that may be hard to believe given the current conditions of the market and all the skepticism that is on all the television shows, etc. But this is what the chart tells us, and as Larry Pesavento says, trade what you see. What I'm seeing is a reversal of the downtrend on the monthly chart. That's it. Now on the bottom, on the middle of the chart here, we have MACD continuing to trend up, to shorten up. The histograms are shortening up. And on the bottom, Elder Force Index, the 13-month index, although it says 13-day here, but it's really 13 months. It's a monthly chart. That is still above the zero line. So we have a chart that's looking contradictory to what we are seeing and hearing on television and what we will see on the daily chart. The daily chart looks weak. It is trending down. So let's take a look first at the weeklies. And here's the weekly chart of the S&P 500. First of all, the Kalman filter is still above the instantaneous trend line. According to the MESA, Dr. Adler's system, when Kalman filter is above the instantaneous trend line, the trend is up on this time frame, the weekly time frame. What we find in terms of candlestick patterns is similar to what we saw last week. We're sort of trapped between this 2046 level on the weekly chart and the 2100 level. Notice that we closed exactly at 2046.61, just at the 2046 level, which we've been considering anyway as a support resistance line. And we don't know whether it's going to continue to hold, of course. It looks as though it's going to break down further, and we'll talk more about that in a minute. The parabolic is continuing to be below the most recent bar, so there's no signal here to reverse the trend, which is up according to the relationship of the Kalman filter to the instantaneous trend line. On RSI 12, we're still above the 50% line. We're trending down, but we're still above the 50% line, giving us a little hope that maybe this retracement will not really break the back of the bulls very much. MACD is continuing to trend down here, but it's not unusual to have MACD trending down for a while when you have an uptrend. So we'll see how that develops, of course. Percent R broke below the 80% line. It's still showing us a fair amount of momentum to the upside. It remains above the 50% line, of course. So all in all, we still have an uptrend according to this MESA system, the relationship of Kalman filter to the instantaneous trend line. No reversal here on the parabolic, but weakness insofar as MACD, RSI 12, and percent R. So that's the situation with the weekly chart. We are looking to see whether this 2046 level will hold. There are signs on the daily chart that it just might not hold. So let's take a look at the daily chart. So here's a daily chart, one we've seen before, of the S&P 500. I've done some calculations here. It's quite possible that we can make a case for a head and shoulder pattern. The head, the left shoulder, the right shoulder. And if this pattern is true, if it holds up, then the neckline is approximately 2046 at this level here. So the way we calculate the target, for those of you who don't know, is you take the high here of 2011, you subtract in the neckline of 2046 equals 65, and then you subtract 65 from the neckline and brings you down to 1981, and that's the target. So that's the first target for a head and shoulder pattern if this is the case here. So the daily chart is showing us some weakness. This is the 930 chart, the 9 EMA and the 30 weighted moving average. The 9 is a yellow line and the blue line is the 30 weighted moving average. Again, we can see that the market closed right there at the 2046 level. And again, the big question is, do we hold there or do we come down to this 1981 level? That's a possibility, a real possibility. RSI has come down to the 40% line, but it hasn't crossed below it. So there's a critical point here. If we break below the 40% line, well, all bets are off insofar as the bullish scenario is concerned for a while until we get down to that 1981 level perhaps. Williams percent R is now broken down below the zero line. That's not very good for the bullish scenario. And percent R is now oversold. So on the one hand, it's a momentum indicator, but when it gets to these low levels here, it is an indication that the market is quite oversold. So in summary, the daily chart is broken down. The 9 is below the 30. We're finding possible support at 2046, but we'll determine that in the next week or two. We're still hoping to hold that as support, but quite possibly we'll have to look at the 1981 level if the head and shoulder pattern holds up to be true. Let's take a look at another chart. And here's that regression channel chart from Best Choice Software. Again, you could discern the head and shoulder pattern right here. This is the spider, but it really is just it's an ETF of the S&P. So the configuration is the same. The head here, the left shoulder, the right shoulder, and what we're concerned about here is that this the spider hit close to the 90% line and regressed all the way down. Is pretty close to the 50% line, and again, we don't know whether it'll hold here, but it's becoming more oversold. It's now at an average level of volatility regression channel, okay, on the regression channel. So let's take a look at something else. Here's the weekly chart of the S&P 500 on Sharp Charts, stockcharts.com. And what we can see here is that we've had 3 weeks of blue bars. So we're showing this is showing the weakness of the that is reflected especially in the daily chart. The 9 is still above the 30, and the 50-day moving average is still holding here as support. It's not broken. The price hasn't broken below the 50-day moving average yet, or 50 a week in this case. So the weekly chart is still showing some signs of weakness too, although it's bullish according to the trend lines. We see we have this resistance level here, and we haven't been able to break above that, above the 2100 level here. And in the middle of the chart, we can see MACD is still above the zero line, but it's trending down. So this market is actually retracing here, and we're probably going to retrace back to that. We might come back to the 1981 level to complete that head and shoulder pattern. Williams percent R is still pretty high. It's just broke below the 20% line, but we'll have to. It's a waiting game to see where we end up on this retracement. Let's take a look at the daily chart. Now on the daily chart, we see that big weakness. First of all, there was that divergence of MACD you could see that if we drew this line here, there was that divergence, because as the market was making higher highs from here to here, MACD was making lower highs. It made a lower high here. Now we have a little uptrend on MACD, but we don't know how far that's going to hold. This is this critical juncture here, where this is going to hold in this level, at this level. At the bottom of the chart, %R is now very oversold, and as we can see, at times when %R gets oversold in these levels here, the market tends to rally from that. See, back here we got a rally again. Back here we got somewhat of a rally. So we'll see if this produces the rally that we've had, the kind of rally we've had here, or back in this area here. All right, so let's take a look at something else. You may recall that we looked at this chart some time ago from stockcharts.com. It is the percentage of stocks on the S&P 100 above the 200-day moving average. Right now it sits at 69%. On the other hand, we have this downtrend here. So we made a high here, and then we made a lower high here. So it's pulling back to the 50-day moving average, and the 200-day is still below here. So the number of stocks is still pretty high, 69%. And I like the fact that the MACD is looking a little stronger here. It's beginning to trend up a little. So we'll have to wait and see how this plays out. But I think that's it for this week. Yeah, the market is beginning to look weak. It's continuing to look weak, especially on a daily chart. And we don't know how far along this correction is going to go. There is definitely a correction going on. Will it go down to that target of 1981, or will we hold at 2046 and move higher from here? Odds are we might see more of a retracement or correction. So what I intend to do is to sell some covered calls on the stocks that I own, and sit and wait, because most of them are not down more than a couple of percentage points. At most, two of them are down like 5%, and I have a 6% rule. So it's getting pretty close to my making a decision whether I should sell any of them. On the one hand, quite a few of them are dividend paying stocks, so I wait if I can, and collect the dividend. So I'll talk to you next week. Have a nice weekend.